Hello YouTube. So let's look at the British pound and Japanese yen, and we're gonna look and see what a market access is according to market profile. So that's what I like to do. So take my vertical line and I'm gonna mark off midnight. So my time is Eastern Standard Time, which is down in the lower right hand corner. UTC -4 right now. So let's look at what happened overnight and let's see if we can understand how we can get a better entry. Not necessarily the direction at this point. I just want to show how an entry, you can have a lot less risk. Right? You can, not that you can identify the very high or the very low, but in trading, they say, okay, if you get stopped out, right? Well, you can enter again, but you don't have to take all that drawdown, right? So look at the date, June 19th, okay? So the market sells off overnight, okay? So let's look at the time. So here we go. Let's try to understand the different sessions. So from usually starting at midnight till about 1 o'clock in the morning. Okay, see how the market went down and then it comes up, right? So if we get any news at this time, right, we know that the Frankfurt session opens up around 2 o'clock and it runs till basically kind of London. So London opens at 3, right? So in a sense, well, if you know that there's going to be volume, right? Now I don't have my volume indicator here, but if I know there's going to be volume at a certain time, why would I enter the market before that, right? And if the news happened at midnight, well, it's not really a great time to enter because doesn't really align with your kill zone, as they call it, right? Your trading window. So I like to trade just before 3 o'clock up to 4:30 a.m. Right? You gotta look at the news, right? Basically, the economic calendar was gonna show you a lot, but this just gives you a general idea when to expect these kind of things, right? So, you're awake, waiting for the setup, right? And then, there's usually a setup this time every day, right? So now let's get into it. So market profile. So if you try to identify an excess or also an extreme, which there is a difference, but I'm not going to get into it in this video. So notice, okay, so look at the time. So 1:35, okay, see the market continues to run up and continues to run up, okay, and then it has a strange pause right here and it doesn't want to exceed this level. Now look at the time, 2:25, right? Okay, so then the market runs up at 2:30 and then runs down, right? And it respects basically the same level, okay? So I'm going to drop a little marker at the high, right? And we're going to see something that's really cool. So June 19th, I'm going to go to the 1 minute chart. So here we go, 1 minute chart. So I've already looked left and I know that for this session, we're basically at a high, right? Now, if we weren't, the market could potentially go higher. But it depends on what time frame traders are active, right? So, remember how I said the market runs up and it kind of had a problem? And then it blew through that and then it came back and respected it. Okay, so if you want a really good risk to reward ratio, here's one way to do it. using market profile concepts. So basically, I'm not going to take a trade till I see volume. And I know the volume will occur basically around London, right? So if I see the market running up and I know it's a sell, here it is, 223, 224, right? And I'm looking at the price action, like, really, what is this? Even though I'm on the 1 minute chart, what do you think this is? So now, see the run up in price? It runs up a little bit and then it consolidates. I would call that absorption, right? Now it takes kind of an eye to see this, because look, okay, see how the market runs up, right? And then it consolidates, and the width of the consolidation is approximately no more than 50% of the run up of the move, right? And that's a Wyckoff thing, right? So I know that the market, yes, it's churning back and forth. There's obviously selling happening, but they're going for stops, right? And when I see this action, it's like, yes, they definitely want to go to the downside, but they're just not ready yet, right? So this is one of the nuances. Like if you want to have a risk to reward ratio of, like, say, like 1 to 20, 1 to 5, or 1 to 100, depending on, like, if you're a swing trader, like you can definitely get these entries. It's just going to take some practice understanding the whole market auction process, right? So here we go. So I've identified that this little zone is potentially going to be rated. And look, even in the price action, it's very deceiving. So we see, okay, we're buying up here and then we're selling down. And look at these bars. There's no wicks at the bottom of these bars, hardly. Right? We come down here and look, what is that? It sort of looks like the market tried to give you a spring. That to me, that's what this indicates, right? And then we come back, like we see buying here, but we also see selling. That's pretty good too, right? And then all of a sudden, right, we have a lifting of the lows. If you don't see that, like a lifting of the lows, right? So we're essentially, like, call this support, right? And then all of a sudden we have higher lows, right? And then we start to blow through this, and look, if we see a spring inside an uptrend, that is like better than seeing a spring in a range, right? So this is the stuff that you got to pay attention to, like, because this will get you the risk to reward ratio that nobody else is going to get. Like, you're going to be like miles ahead of other people in their trading, right? Just understanding simple things like this, right? So I know when I, like, say if you receive this bar form, even on the 1 minute, you get a pretty good idea that this high is going to be rated, right? So now, here's the kicker. Okay, look at the time. Here's 2:30 Eastern Standard Time. Now, market profile on the 30-minute chart prints one letter every 30 minutes. Okay, so if I want to see an excess on the market profile, I want to see probably about 2 or 3 prints representing 2 pips each, right? So, like, in my experience, I've seen up to about maybe 7 or 8 prints, but as little as sometimes 2 or 3 prints, right? Depending on how strong the other time frame traders are inside the market. Meaning that, okay, if there's scalpers active in the market, then the market has to introduce a higher time frame to take the market down in whichever direction it's going to go, right? So what I'm explaining is that here it is 2:30, right? So say if we're printing a D right now, right? Okay. So now after 2:30 we print E. So here it is 2:31. Okay. Now let's draw a little thing. So 2:31 we print E's all the way till 3 o'clock. Okay. So here we go. That's our E window. Right here. I get my text. Printing E's. Right there. Now, I'm going to move this up. And I'm going to say here. See, I'm not even looking at a market profile here, but we are understanding right? So can you see okay, so you see that that is about 16 pips. So D's were printed and then E's were printed. And when the E's were printed, the market rose up about 16 pips, which would give you about 8 prints, right? Because each print is about 2 pips wide, right? So on the profile, it's gonna kind of look like this, and then we're gonna see D, and then I think we're gonna see E's sort of there. So it might look something like this. And then you'd have more to the downside, right? You'd have more letters filled in here, right? So this would be a selling tail, a pretty good one, right? So look at all the other higher time frame traders that took advantage of this, right? So now you see as the E's were finished being printed, look at the time, 3 o'clock. Okay, so now 3 o'clock, it switches to F's, right? And look, when we print the F's, it does not re-enter the E section. So now I know that this is a tail, right? Now, it's always possible for this to get run over, right? But you're looking at the price action and you're looking at the time. So this is part of the reason why I don't trade prior to basically London Open, right? And you're going to find these highs and these lows, they look like they're random times, but they're not, right? Because we understand market profile, right? We can find this, right? And then what we do is we're waiting on the 1 minute chart, right? On your mobile device, and you're waiting, right? So you would sell this, right? So you're most likely, you're not going to catch it right at the, like, unless you're really good with your reactions, like I've only caught it once within like 2 or 3 pips of the very top, right? It's pretty difficult to do, but what you can do, put your stop at the high, right? Okay, so you may only like if you're risking 6 pips, like in my opinion, you're risking too much. Try to get the entry so that you only risk like maybe 2 or 3 pips, right? So what does that translate into? Okay, your risk is like say if it's 4 pips, okay, right? You got $100 account, right? If you risk 1 or 2%, maybe 5%, okay, so that's like say $4 or $5 risk. That's up there. Now, if you're correct, why not ride it all the way down? Right? So your risk, like your risk might be this. Your reward, like this is what I have done to double some accounts, right? And the thing is, you can manage reward, or sorry, you can manage risk, but you cannot manage reward. So get your entry. Chances are it will not be retested. Now that's not saying that your excess is not going to get run over, but that's on your vigilance to understand, okay, what time am I trading, right? So if you're trading an Asian session, the rules are completely different, right? The times are different, right? You got to understand, okay, is the market into new highs? Is it not? When's the news? What is the market trying to do with respect to structure? But basically, if you take this basic idea and run with it, you're not going to want to take any other trades, any other types of trades. Like, why would I take a trade inside some value area that's in the middle, right? So where's your stop have to be? Usually above the high, as a lot of traders do. So where is that? How big is your stop? It's massive. It's like 15 pips, right? Compared to what I just explained here, you could reduce your risk like 5-6 pips, right? Like, what's wrong with that? And then you catch 200 or 300 pips, right? If you're planning to swing trade this, right? So this is one of the advantages of understanding market profile. Now, I haven't even shown you a market profile TPO chart yet on this video, but here we are, we're understanding the principles and we're applying it. And you don't even need a computer to run your TPO chart. You can do this on your phone, whether you use TradingView or MetaTrader 4. So hopefully this makes sense. The whole thing about the price move is contained within 30 minutes, and you're looking at the price action to verify basically what's happening, and you'll see it. You'll see, like, price will really shoot up, and like if you pay for TradingView, you'll actually get a better update. The data is updated more than once a second, and you'll see this a lot easier, right? Because like I have the free version right now, but you'll see it. Like the market will literally shoot. It's like it's breaking like through water or something like that. It's just like shoot up. You'll know right away, right? Because you'll see these last few bars and you're like, uh-oh, I know what's happening, right? So then you try to catch it, and you better be ready with that button, right? Right? So that's how you get it. Now, there is ways of catching it upon touch, as they say, but until you get the confidence and the understanding, this will really improve your trading. But anyways, this is the way I trade, and I don't trade any other way now.